Our last financial statement from Chapter 3 is the statement of cash flows. The statement of cash flows provides a summary of the firm's cash flows over a period of concern. Each statement of cash flow will have three parts: the cash flows from its operating activities, cash flows from investing activities, cash flows from financing activities. What does each one of these parts mean? Well, first, let's take the cash flows from operating activities. This will be the cash flow related to the production and sale of the firm's products and services. The cash flows from investing activities is the cash flow related to the purchase and sale of the firm's fixed assets and business interests. And finally, the cash flows from financing activities result from debt and equity financing transactions. So how do we calculate each one of these components in the statement of cash flows? So the format that I'm going to present to you is a little different from what's presented in the textbook. I've summarized certain entries in this statement. We still end up with the same answer if we were using the format from the textbook. I just think that my format is a little bit easier to remember. So let's move forward. First, we're going to calculate the cash flows from the firm's operating activities. So first, we're going to take the firm's net income, which we will find in the firm's income statement. Also, from the income statement, we will add in depreciation and amortization for that accounting period. Afterward, we're going to look at the firm's balance sheets. We're going to be looking at two successive balance sheets. If this is an annual statement of cash flow, well then we are looking at 2 years in a row, the most current year and the year before. So we're going to take a look at our current assets, not cash, not equivalents. So that's going to leave us with what? We're going to be looking at our accounts receivables and our inventory. Cumulatively, from 1 year to the next, have we seen an increase in those remaining current assets, or have we seen a decrease? If we've seen an increase, that increase will be subtracted out. If we've seen a decrease in our current assets, that change, that decrease will be added in. So it'll be one or the other. Then we're going to look at, also on our balance sheet, our current liabilities, but not notes payable. So that's going to leave us with our accounts payable and our accruals. And we're going to look at them cumulatively from 1 year to the next. Have they increased or decreased? If there's been an increase, that change will be added in. If there's been a decrease, we subtract it out. So once we net out all these entries in this portion of the firm's statement of cash flows, we're going to end up with cash flow from operating activities. We move on. Our investing cash flows are our cash flow from investment activities. We're going to take, again, we're going to look at a balance sheet. Two successive, actually, balance sheets. So if we're looking at annual figures, we're looking at 2 years in a row. We're going to take our most recent net fixed assets. That's our ending figure. We're going to subtract out our beginning amount in net fixed assets, which is just the beginning of 1 year is the end of the prior year. So we're going to look at the year before's net fixed assets entry. So we're going to come up with a difference. And then we're going to add in depreciation and amortization, which comes from the income statement. That leaves us with our cash flow from investment activities. The last portion of the statement of cash flows is the financing cash flows. So we're going to look at 2 successive balance sheets in a row. Look at our notes payable account. Has there been an increase or a decrease? If we've seen an increase, we're going to add in that increase. If it's a decrease, we're going to subtract out that change. We'll do the same for long-term debt and in any of our stock accounts. Has there been a change? And finally, we're going to calculate our dividends. Did the firm pay any dividends in the past year? We know we can find this from our statement of shareholders' equity. Once we net all these entries, we'll get our cash flow from financing activities. So for DeLeon 2019, here are the various components of the statement of cash flows. Our net cash from operating activities is a minus figure. So that tells me that DeLeon cannot produce $1 of cash in 2019 from the sale of its goods and services. Its net cash from investment activities is over $711,000. This tells me they've invested this amount of money in their long-term or fixed assets. They derived a lot of cash from borrowing money, over $825,000. So now that we know where the cash comes from and where it was spent, in other words, the sources of this firm's cash and its uses, the statement of cash flows is sometimes called the sources and uses statement. So, did we get these numbers right? Let's check it out. Well, we take a look at DeLeon's cash account from 2018 to 2019. You know what? It went down by over $50,000. Okay, well, did we get these numbers right? Well, if we take our net cash from operating activities, subtract out the net cash from investment activities, add back in the net cash from financing activities, we end up with that same number. So our work is correct. So anybody could have looked at the cash account and seen that it changed. But what the statement of cash flow tells us is where that change occurred, where the firm derived cash and how it used cash. So you might be thinking, where did these numbers come from? What is she talking about? Well, I want you to click on this link and I've prepared a short tutorial, step by step, how I derive these numbers. So the conclusions, again, for DeLeon from its statement of cash flows is that the net cash from operations, not good, mainly because they had a negative net income. The firm borrowed a bunch of money, and even after borrowing, its cash account still fell by over $50,000. I know that this is a more complicated statement. So what I've done is to prepare some more examples for you. So on this first link is just a run-through of this alternative format. The second link here uses the firm Allied Food Products, and that's the firm that's in Chapter 3. And its statements, balance sheet and income statement for 2 successive years that are used to produce its statement of cash flows, that's the company. Tables 3.1, 3.2. The dates are earlier than those in our textbook. When I prepared the tutorial at this link, the dates are a little earlier than those in our textbook, but the numbers and the method is still the same, so I think it's still helpful for you.